Psychology of the farmer persists in America. You know, during the Super Bowl, the annual big football match, they had an advertisement that featured, and God created the farmer, you know, on the 7th or 8th day, and they were celebrating the farmer in America. What they failed to mention is that on the day after, God created genetically modified seeds at Monsanto, and farmers around the world are committing suicide. I think that's what they should have mentioned. Indian farmers and American farmers slitting their throats because of Monsanto, a patent terrorist. Was entered into the food chain, monetizing seeds in a way that has created poverty and obesity and corn being injected into products like Coca-Cola. So you have this woman who drank Coca-Cola to death, and now Coca-Cola is being held partially liable for that death, and rightfully so, because they're part of a concerted effort by the corporations and bankers to create basically a holocaust of the consumer.
So what is underlying all of this, of course, the most important ingredient in all of it is the bond prices and the yields. We saw last week bond prices in the UK fell by 4% in one day.
Yeah, as I predicted on this show.
Yeah, so yields are going to go up, and this is when people are still holding on.
Well, they're holding on to their tracker rates on their mortgages, which are now going up, so they'll be homeless.
They're holding on to their tracker rates. They're holding on to their delusions, which are far more important. Those are much, much, much more dangerous to the global economy and to your survival, is that if you hold on to those illusions for a little bit too long, if you don't have gold or silver, for example, because you're holding on to this illusion that Ben Bernanke's trillion-dollar coins might one day rescue you, and so you can go back to how it used to be, and when all those goods at Tesco and supermarkets across the world were going down, that would be fine. But Fed's Stein, banks could be smacked by a bursting bond bubble. Banks could be walloped by a bursting bond bubble, cautions Federal Reserve Governor Jeremy Stein. Banks, Stein warned in a recent speech in St. Louis, may be especially at risk from losses because they typically hold a higher portion of long-term bonds which suffer the most when interest rates rise.
You know, the bond apocalypse is similar to what happens when you throw a rock into a house of mirrors. And what I mean by this is that all the banks are rehypothecating bonds with each other to finance the creation of new bonds that are sold to another bank that's rehypothecated that bond to be sold to a third bank and a fourth bank ad infinitum. It's daisy chain of fraud with HSBC, Barclays, RBS, Lloyds, JP Morgan, Goldman Sachs, BNP. They're part of a daisy chain of fraud, a house of mirrors of rehypothecation where there is no collateral buttressing any of these bonds whatsoever. They hold on their books for 100 cents on the dollar. They're worth 0 cents on the dollar. The bond apocalypse is upon us. These bonds are going to be marked down to zero, not by government edict, which should be the case if there was a functioning government, it represents government, but by the bond apocalypse, which means that suddenly the shot is fired. I predict that once China, or I should say James Rickards predicts, once China announces that they have 4,000 tons of gold, and they are talking about a gold-backed renminbi, this will be the trigger that starts the cascade of bondpocalypse, resulting in interest rates in the UK and US around the world going up 3, 4, 5, 6% in a week. All right, Stacey Hubbard, thanks so much for being on the Keiser Report.
Thank you, Max.
Stay tuned for the second half. I'll be speaking to former energy regulator Chris Cook. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to former energy market regulator Chris Cook. Chris Cook, welcome to the Keiser Report.
Hello, Max. Good to meet you again.
All right. Well, Chris Cook, you have written something for Asia Times called Gas Diplomacy Time for Iran. Tell us about it.
Right. Well, gas diplomacy is, in my view, we've gone quite far enough with dollar diplomacy. I think it's time for energy diplomacy generally and gas diplomacy.
What is dollar diplomacy?
Dollar diplomacy has also been called dollar hegemony, I suppose. Basically, the American might is right.
Right, so the American empire is based on the dollar. Not so much, you know, people don't understand that America has an empire. Matter of fact, they resist the label. They say, we don't have an empire. We're just minding our own business over here and in between Mexico and Canada. But the dollar, the de facto global world reserve currency in places like Iran and elsewhere, has been really the means for imperialism. Yes?
Yep, absolutely. Michael Hudson writes well on this subject. He wrote about dollar hegemony, and that's precisely what we've got. The petrodollar, the deal between the Saudis and the US going way, way back, was, You know, we keep you in power, say the US, we buy your dollar debt, say the Saudis.
Okay, so let's get back to going from a dollar standard to gas diplomacy in Iran.
Yeah.
So we moved from dollar to gas. So now talk about how this gas diplomacy works.
Right, well, where this comes from is the thought that basically energy is neutral. It's if you go back to the Cold War, the Russians were reliably supplying gas into Western Europe right through the Cold War, and the West were paying for it. No matter that there were proxy wars going on all over the world, that was the deal. Also, you had, at the worst time, when Khomeini was in power from 1979, 1993, what were the Iranians doing? They were selling oil to Israel via Mark Rich. I'm saying that energy actually transcends all ideology. That has been the case, and I think in the future there is a solution to be found to the current problems by, let's call it, energy cooperation. People, you know, even the lions and the gazelles, when they go down to the water hole, you know, they don't kill each other at that point. To me, energy is the modern water hole.
Okay, when you talk about gas diplomacy, and we're talking about dollar diplomacy, but it's not about, I think it's important to make a distinction between oil diplomacy and gas diplomacy. So gas, you know, you have a few spheres of influence for gas. You have Russia, you have Iran, you have Qatar. Those are the big three gas players in the world. So you're saying that at this time, what about the embargo happening in Iran? I mean, they have this huge embargo, but how does that factor into this gas diplomacy?
Well, in my view, gas is the new oil. I talk about transition through gas. If you like, the possibility of a new framework for energy pricing, a new framework for energy cooperation, more to the point. Because I think what's needed, and I was at a conference recently, quite an interesting one with people like Richard Pearl and John Hanna, not exactly, you know, quite hawkish. And they were saying, look, there needs to be some new elements in the negotiations. We can't just keep offering the Iranians some spare parts for their Boeings. That isn't going to cut it in the negotiations.
Right. Now, you told us here on the Keiser Report, you were talking about inflation in Iran. The price of chicken had doubled in a week that you were there.
Yes.
And there in the rial is really in hyperinflation almost. I mean, it's collapsing. And again, these are tremendous pressure being borne in Iran, presumably because of the standoff with the other their Mideast player, Israel. So you're suggesting that this gas diplomacy is somehow going to usurp this tension between these two, that economics will trump what's going on there. It's all just rhetoric. You know, how does this play out? I'm hearing two different things here.
Well, it's got worse since I was there. It's gone over 40,000. It was a mere 30-something thousand rials to the dollar.
So Iran is being squeezed to death. So how is that diplomatic? Well, like if I put my boot on your throat, that's not diplomacy.
To some extent, they're their own worst enemy, because they are, you know, the problem they got with they subsidise oil and gas and products and energy to a massive extent, and they do it by printing rials. I'm saying that maybe there's another way of doing this, that maybe they could put the price, the domestic price, up to the global price, not just of gas, but of, you know, any carbon fuel, and then compensate the population with units or prepaid units redeemable in payment or returnable in payment for gas. In other words, they could monetize gas, because that is the basis of their currency. Well, gas and oil.
Well, in other Mideast countries, they just give people an annual stipend, annual income based on energy. Same thing as Alaska. Yeah,
but they pay it, Max, in fiat currency. This is my point. I'm saying a currency needs a backing. Gold is one backing. I believe energy is another. I think that gold is a very useful backing for what I call the clearing of credit, the credit clearing. When it comes to long-term investment, it's not, I think gold doesn't work so well, because essentially what you're doing is you're burying the gold under the ground for the period of the loan. You know.
All right, so this whole premise of this discussion is it needs to be upgraded some. This isn't about gas diplomacy. This is about a gas-backed currency, is what we're saying, which will lead to more diplomatic relations.
Well, there's a bigger picture to even that. Yes, I advocate